Hi students, in this video we are going to see chapter 5. It is all about dissolution of partnership firm. What do you think that dissolution of partnership firm means? So let us see what actually the meaning is given here. All the partners of the firm cut off their connections with firm and the business of the firm is closed down. So dissolution of partnership firm means each and every partner's connection to the firm is going to break down. No more they can be the partner of the concerned firm. And moreover, because of this, the firm business is going to end. Now let us see what could be the next. Settlement of accounts. How the accounts are going to be settled in case if the complete firm is going to get dissolved. First thing is, you have to make the payment to the outside liabilities. What is this outside liabilities? In case the suppliers have provided you any goods on credit basis, they are called as creditors. So you have to settle them first because they are the outsiders. Then bills payable, similar. Bank loan. If the bank has provided a loan for the sake of your expansion of a business, for any further necessities to be met, okay. In that case, the bank is going to be the outside of the company. So you have to settle them first. Then the partner's wife has provided loan. Yes, see, if a partner has provided a loan, he is a partner. He is not an outsider. But when partner's wife is providing a loan, okay, you may have such type of instructions in the question, so we have to consider it. In that case, partner's wife is treated as an outsider. So even they have to be involved in making the payment first. Then, any friends of a partner has provided a loan. Imagine if partners are working into a company and any one friend of a partner is providing a loan, even he is treated as an outsider. And first we have to settle the outsiders. Then secondly, the payment of partner loan, if anything is provided by them to the firm. Yes, if any one partner is providing a loan to the company for any emergency case, in that you have to give a second priority in settlement of such loan. Okay, partner's loan, keep in your mind, always second. Then finally, we have to make the payment of partner's capital. So what is left out? If there is any surplus or deficit, it depends upon here. We don't have balance sheet. If the firm is getting dissolved, okay, we need not go for balance sheet. Instead, we will close the accounts up to bank or cash account, because we have to check whether everything is settled among all the partners. So let us go for the next. Accounting treatment. What are the accounts to be prepared? It's very simple. Only 3 accounts to be prepared. Very simple, this chapter, and it is very interesting. You people will enjoy learning it and you people will enjoy teaching others. Don't trust me, but it happens. Realization account, partner's capital account, cash or bank account. Imagine the last 2 chapters were all about revaluation account, partner's capital account and balance sheet. But here, instead of revaluation, we have realization. What could be the main difference we have to know? In case of revaluation, whether the partner is coming in or going out, we have to revalue the assets and liabilities as per the market price. So whether there is an increase or decrease. But in case of realization account, it is where the company completely is getting closed. So you have to use all the assets to be sold out and to pay off the outsiders. So realization account is quite different, which means it includes selling out of the assets and paying out of the liabilities. Then partners capital account is just similar. Postings, it's very simple. Then cash or bank account, again this is very simple, only posting entries. If you observe, you'll be the person who's going to just learn everything in a logic way. We are going to use only logic, right? Okay, fine. Let us go for the next. Let me not waste my time. Next, meaning of realization account. Just observe. An account that is prepared at the time of dissolution of a firm to ascertain, to find out the profit or loss on realization of assets, sale of assets and payment of liabilities. The profit or loss is transferred to partners capital account in the profit sharing ratio. So this is very simple. You're going to take all the assets and check in which value it is sold, whether it is less or more, whatever it is, that's not going to be considered. Okay, at what price we are going to sell it, we have to see that whether we could settle out the liabilities, that is payment of liabilities, and see if there is any excess amount left out, whether it is a profit. Okay, it will be shared among the partners. Again, if it is a loss, it should be shared among the partners in their profit sharing ratio. Now let us go for the very important thing, the format of realization account, how it is going to be prepared, the basic which we have to know. You just observe, follow that. Okay, realization account is the important thing we need to concentrate. Very simple, very easy. But your observation with a complete presence of mind is important, students. Yes, let us see the next. Okay, students, now let us come for the format of realization account. Just observe and listen as I am actually explaining you people. You have to just go for the imagination of question now. When you go for realization account, first thing in this chapter is imagine the opening balance sheet, liability side. Okay, it is on the debit side. From the liability, you have to take out the outsiders. Okay, now just observe on the credit side, which is in the blue color I have highlighted. Just observe first creditors, bills payable, bank loan, bank overdraft, partners, wife loan or friends or others, okay, outsiders. Then outstanding expenses. If you have provision for doubtful debts, which is minused under the debtor, that you should directly take it because that is actually deducted there. You have to take it on the credit side. Either it is a bad debts or for doubtful debts. So provision for doubtful debts or provision for bad debts. All these are outsiders. Just observe. It is not that entire thing will come in the question. Among these repeatedly you might have 2 or 3 coming up in the question. So you have to observe this. Okay. First step. You have to just take those with the same book value and post it on the credit side. Next, observe. Moving towards your asset side of your opening balance sheet. It is on the credit side. Now what we have to do, from those, pick all the assets. Okay, only the assets. Observe. Land and building, plant and machinery, furniture and fixtures, vehicle and motor car, bills receivable, sundry debtors, stock, investment. So these types of assets, fixed assets, will be repeating. So I can't say the entire thing will come, but I'm sure that you will have the fixed asset that you have to just take and post it on the opposite direction, that is on the debit side. So I have highlighted with the green to make it very flexible for you people. So now you just observe. Now let us go for the next step. Okay, first step we have completed, that is posting from the opening balance sheet on opposite directions, the assets and outsiders, that is outside liabilities. Next step is you will have adjustment given in the question. So as we had for the previous chapters, the adjustment similar you will have related to this as well. Okay, now let us go for the credit side again. Now on the credit side, whatever the assets, okay, are going to be realized, which means sold out, in the adjustment they would have given the values. You are not going to compare it. We are not going to compare it. Only just pick what the assets are given and take it under the cash or bank account inner column, that is inside, with the values. Even the values will appear within the column that is inside, not in the amount column. Now all the totals of these assets which has been realized will be taken in the amount column. So it will be always in the form of cash or bank. Clear? Now just observe. Similar, land and building, plant and machinery, furniture and fixture, vehicle, motor, car, bills, receivables, sundry debtors, stock, investments and other unrecorded assets. In adjustment only they will provide unrecorded assets, which means we would have found that at the time of closing up the company, we might have forgotten some assets to be recorded in accounts. That might be found and that will be included for realization, that you should write. So instructions will be given. So if you find that, you have to take care. Clear? Now next, similarly on the opposite direction, whether the instruction is given or not in case of payment of outsiders, okay, payment of outsiders, we have to show that it is paid off. Observe, to cash or bank account immediately. The cash what we received here out of the sale of assets, that should be used to pay off the outside liabilities, creditors, bills payable, bank loan, bank overdraft, partner's wife's loan or others, and outstanding expenses, whichever was on the credit side. First we took in the book value, the same book value. If adjustment is given, how to treat? Follow the instruction. If not, with the book values, just observe outsiders. You have to check whether all is done. So when we are going for the calculation of illustrations and exercise, you will understand very clearly, but still just observe. Okay, this is the next step. We have paid to the outsiders. The amount will be taken in the outer column, total. Okay, each value will be taken in the inner column and the total will be taken in the outer column. Then next step, they would have given in the adjustment, realization expenses paid, dissolution expenses paid. So in this case, you have to write to cash or bank account, whatever, whether it is a partner. If it is a partner who is paying it, okay, it will be transferred to his partner's capital account, concerned partner's capital account. But if it is not mentioned, it is being paid by the firm, it will affect only cash or bank account. Just observe. Next. So from the adjustment main part, we have completed. Assets are realized, payment of liability is done, and realization expenses paid. Next step, the last. Okay, suppose in the instruction, now the entire asset is being sold by the firm. Okay, few assets are being taken over by the partners. Say for example, a furniture or motor vehicle, this type of small bills receivable, this type of assets like stock and all is taken over by any partner. Any partner is saying, I will pay it and I will take it over. In that case, it is not going to affect cash. You are going to transfer to partner's capital account the value of such. That is what? By partner's capital account. Observe, any assets, whether it is sold or it is being taken over by the partner, it will affect only the credit side. Any assets taken over by concerned partners, transfer to the partner's capital account. Similarly, if any one partner is promising, I will pay off the creditors, I will pay off the bills payable or the bank loan, or my wife's loan will be taken up by me itself, I shall face it. In that case, you have to transfer the complete liability to be taken by the concerned partner capital account. Just mention it to partner's capital account, whatever the liability is taken over by the concerned partner. and the value to be written. Clear? Till here, the complete realization account is completed. The entire burden. It's very simple. When we make a practice, it happens. Next, the last step. As we know commonly, we come across which side is greater. Credit side is greater, you get a balancing figure as profit. If your debit side is greater, you get the balancing figure as loss. And this will be distributed among the partners in the inner column. That's all. This is a very important thing which we need to know. Now let me just show you people. Observe. This is how the complete format is. I've just given a break in between to make you people understand better. Observe. This is how the format is. Thank you, students.